Hey everyone, welcome back. Today I'm breaking down Liberty Energy Inc., that's ticker LBRT for anyone eyeing the energy sector. Can this hydraulic fracturing innovator's stock ever hit $1,000? Let's dive right in. First off, Liberty's story is pretty compelling. They're based in Denver and specialize in hydraulic fracturing, which helps oil and gas companies get more out of the ground. Started back in 2011, went public in 2018, and today, 5,700 people strong. With a $2.5 billion market cap, they're no Exxon, but they matter a lot in North American energy. Now, let's talk numbers. In 2024, Liberty pulled in $4.3 billion in revenue. That's down a bit, about 8.5%, from 2023's $4.7 billion. Net income slid too, from $556 million to $316 million. So profit margin, around 7.3%. Still, their tech edge keeps margins competitive, especially compared to rivals like Propetro and Cactus. And with a 32% return on capital employed, they're squeezing real value out of every dollar. So strengths and weaknesses? Let's break it down. Liberty's got advanced fracking tech which boosts efficiency. Plus, they're diversifying. Think distributed power systems, with 130 megawatts already in play. They like their shareholders too. $550 million sent back through buybacks and dividends since 2022. On the downside, energy is a crazy volatile sector. Tariff costs, new regulations, and tough competition from players like Select Water Solutions, all big risks. Debt, not a huge worry here. Debt to equity is under control, cash flows are healthy, and they're funding those buybacks and dividends without overreaching. Beyond fracking, they're branching into power generation, geothermal, nuclear, and battery tech. Their recent IMG Energy Solutions buy adds muscle in distributed power, planning to ramp up to 400 megawatts by 2026. How about the returns? IPO price was about $17 back in 2018. Since then, it's been a bumpy ride, but dividends help. The 2025 dividend yield is 2.75%, or about 35 cents a share, up from last year. Dividends are growing, but it's no dividend aristocrat yet. Liberty outpaced the S&P 500 in 2024, but lagged in 2025. Looking to the future, things get interesting. Investments in places like Australia's Beetaloo Basin and cleaner power tech could drive growth. Rising demand from data centers and electrification? That's more potential upside. But if we get stricter environmental policies or commodity prices tank, Liberty could feel the heat. $1,000 a share? Honestly, that's a long shot unless there's massive growth or a market shakeup. Bottom line, Liberty Energy is innovative, shareholder-friendly, and diversified, but it faces big risks. Short-term, expect 5 to 10% yearly returns, maybe 8 to 12% if they really deliver long-term. $1,000 a share? I'm not betting on it. Yet. What do you think? Drop your thoughts below, hit subscribe, and stay tuned for the next stock deep dive.